Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your metals market update. And this metals market update is for Thursday, the 18th of October, 2018. We're about 3:52 p.m. Central Daylight Time, which means the markets are still open. Settlement prices are mostly in. Gold held up today at the expense of silver, and copper got hit hard. Remember, in the morning, we're going to get China's GDP. And as I was on Fox TV talking with Liz Clayman today, I said, I don't believe any Chinese numbers to begin with, and they're certainly not going to come out with a blowout number to the downside. I'd be really surprised. That doesn't mean it can't happen. The word surprise does not mean it can't happen. The markets got taken back today, and you can see the stock market breaking. As we had a big break the week ago, we had an attempt at a rally, and now we're filling back in. This is a back and fill type market situation right now. The bigger events are the increasing in U.S. interest rates, which are weighing on markets. The fact that China's stock market has corrected 30% down this year already. The fact that their currency keeps falling. Italy has a budget where they're challenging the EU. And, you know, it's an interesting challenge. What can the European Union do about it? Nobody's ever said they're not going to pay attention, and no Brexit deal. So gold's got its hands full. And gold is acting actually pretty well. The market is not responding in a negative manner as markets around it have been. It's acting as a bit of a hedge against a safe haven right now. It is trading over the 18-week average of closes. And for the week, this market is up about $5. I don't know if it'll close higher or not. If it pulls back, I wouldn't be surprised if the 12.17 level, about $6 lower, becomes the support. As you look at the chart action here, you can see the market's got a pattern of higher lows, higher highs. Now, today was an outside day up. Why is that important? If you take out today's lows, tomorrow, Friday, or Monday, that could mean that the market makes a run for the closest moving average to the downside, which in this case would be the 18-day average of closes. It would be what I call a bull trap in a market that's up against, it didn't quite hit it yet, by the way, the 100-day average of close resistance. It did hit the upper Bollinger Band, and now you've got a real formidable area, 1236 in the market. What gold also has going for it is we don't know about the Saudi situation. Steve Mnuchin, our Treasury Secretary, is not going to the big meeting, as they call Davos in the desert, and nor are so many heads of other companies. In other words, everybody's backing away with the death of this journalist that the Saudis are accused of at this point, possibly have had a hand in his disappearance. Could be a murder. All right, so in looking at the market, that would be one possibility. I don't like the fact that we're just staying overbought and not embedding. My experience with this, and it's only experience, doesn't work all the time, is that when you do this, it's just a matter of time till the market corrects to the downside. Markets that try to get into embedded territory and just don't do it are very overbought. When I come to the GLD ETF, again, we're fighting at this 100-day average, 4 days in a row. In between that and the upper Bollinger Band, like futures, very overbought. Like futures, very much in an uptrend. And let's take a look. Yesterday's high was 116.33 to 115.68. Today, we have an outside day. So therefore, the same thing. If today's low is taken out, the odds, doesn't mean it's going to happen, but the odds favor this. I will be calling this a bull trap at that point, and the odds favor price and the 18-day average trying to come together. In GDX, the miners, you can see how the market acted a little bit different. It's just riding up to the upper Bollinger Band, not with an outside day. It's in an uptrend. If it takes out 1976, it could trigger a return back to that number as well. So what I'm saying is you're in a precarious position here, but the news of the day is certainly friendly to the market. The question is, does it have enough strength to carry it? What's gold doing against silver? It keeps gaining on it. So now you've gone from a correction low of 81.31. In other words, you needed 81.31 ounces of silver to get 1 ounce of gold. Now you're back to 84.23, which means that the silver market is losing to gold, and that's not typically what you want to see for base metals to, if you will, start an uptrend. What silver has done is it's got a pattern of a lower low, higher high, made a run to the upper Bollinger Band where I would have looked for resistance to develop. Now you've got your pullback to what we call that line in the sand, that 18-day average, as the market looks to see what next. Since it's got the pattern of a lower low, higher high, whatever it does here, at this point it'll be difficult to set up a trend unless what? Unless you get over today's high and close over that 18-day average without taking out today's low. If that happened, I could argue you've got higher lows, you've already got the higher highs. See what I'm getting at? Take out today's lows, that pattern can't develop. In the copper market, you fell back down to support. Now, I don't think it's a surprise to see copper backing off as we're seeing the stock market declines in China continue, as we're seeing the question of what their GDP is going to be, and the fact that they're the world's largest single user of copper. So the market's set back, it's in a downtrend, it has hit its downside target, momentum is pointing down, and momentum is oversold. Any reading under 30 is oversold. So I think the pros took some money off the table. That does not mean it can't go lower, but at those numbers, that's what I often see. We have divergence going to a degree in the platinum. We've got momentum down. The market, as you can see, is trying to figure out what to do here. If it closes the way the last quote is, and I don't know what the last settlement price will be today, it's under the 18-day average. That means the bias would be down, but we have the swing line up. I don't see anything to do other than say the market's trying to develop a trading pattern. It's got two levels of resistance, the 100-day average and the upper Bollinger Band, while the palladium market is in a downtrend in terms of the swing line. And I don't know where the close is. You're right on the 18-day average. So it might be that you're on it, over it. It'll be very similar to platinum, but momentum is pointing down. All of these markets are not, in what I'm getting to in plain English, they're not in buy conditions there. In the dollar index, the dollar soared today as the market is nervous about world finances, a combination of Italy saying to the EU, the heck with you. A combination of looking to see with Brexit, no deal, what's that going to mean? The Saudi situation, the U.S. keep going on interest rates, and how does the rest of the world react to it? So you got your hands full there. But with that, we go to our chart of the day. Now, what I like about the chart of the day is that I know a lot of you like Fibonacci retracements and other measures that you figure where a market's going with. This is quite simple to work with, easy to follow, and that's what it's about. It's where might the market go. It is not a trigger to get into a market. It is a trigger of where you might want to come out of the market. That's a big difference. Is it any different than the rally we had just now in the stock indices, where you got up about 48% of the correction that we've seen in the past week and a half? And that's a Fibonacci level, 50% Fibonacci, the center of it. And the market backed off again. Give us a call. You can go to our website. You'll see the free offer for chart of the day. Just click on any of our offers. It'll come up. Click up here. It'll take you right there as well. I'm Ira Epstein. Have a great trading day.